I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in Toronto ahead of the PDAC conference, and I'm joined by Dawson Brisco of Morien Resources. Dawson and I were just talking about, well, the chaos in the markets out there, which is obviously a pertinent topic for everyone right now. But it sort of led us to back to Morien in that corrections, crashes, whatever this is, when things stabilize, what do people go? What do people do? And people want to buy at the bottom, but they don't just want to buy anything. They want to buy things that have, that carry a bit less risk and therefore have some more certainty of performing on the other side. Morien fits that bill in like a lot of ways right now. So just talk to us a little bit about that.
Yeah, we saw a huge sell-off in the sector in the past 3 to 4 days. Morien only came off by 3%. We have an active normal course issuer bid program, and so we're never discouraged by a low share price. It just gives us another opportunity to pick up cheap stock. The yield went from what it was 1.8% at 55 cents. Now we're down to 49 cents, and so our dividend yield is now at 2.1%, which is the highest of any royalty issuing North American company right now.
Right.
And so we are cash flowing, we're issuing dividends, and we have that sort of floor of the share price that's supported by the NCIB program.
And then, so it's a royalty company on a coal mine, and that in itself has its own limitations on risk and for the reasons that you just said. But then there's also this sort of catalyst-driven year ahead, which is, I think, why you probably didn't see much selling into the last week.
Yeah.
Because those who hold the stock, it's actually not a large list of people. You know them all basically by name, and they're all sort of waiting for this catalyst-driven year.
Yeah, I communicate regularly with what I would say is about 80% of the shareholder base. That's a really high number. We only have about 900 shareholders in our company. The NCIB has been removing a lot of shareholders. And so what we've seen is our shareholder counts dropped from what was 3,500 down to about 900 shareholders, which is what we have today. And most of the people that I talk to, in fact, everybody is waiting for that catalyst event,
Right.
which is a decision from the operator to go to the retreat mining stage.
Right.
And when they do, we'll see a big jump in productivity and our royalty along with it.
And there's two aspects to that. So right now, driving tunnels into the mine so that you can get ready to mine your way back.
Right.
That in itself, that will happen no matter what.
Yep.
And that in itself will boost production significantly because driving tunnels is low production volumes and coming back is higher. And then there's this overlying potential that could make the story bigger.
Yeah, that's right. So I'm not the operator, and so I shouldn't speak on behalf of the operator, but they're around 3.6 to 3.8 kilometers out of what looks to be a 4-kilometer long production panel, the first production panel.
Right.
There'll be dozens of production panels in the lifespan of this 30-year operation, but that first panel's almost done. And what that means is it's ready to be retreat mined. And so when you retreat mine, you can either do it with continuous miners, which is what they're permitted for, and that'll get you to the peak production rate. That'll give us our $6 to $11 million a year. That'll get shareholders their 7-cent dividend.
Right.
Or they install a longwall, and if they install a longwall, then there's a good chance that they go to 4 or 5 million tons a year. And at that rate, our dividend goes from what was 7 cents up to potentially 15 cents and higher.
And higher, yeah.
Yeah.
So it's a low-risk story in being a royalty company. The coal market is what it is, but it's sort of a large behemoth, in some ways less impacted by some of these gyrations in the markets.
Yeah, that's right. It's a little hard right now to quantify how the coal space is going to react to the coronavirus. We've seen coal prices do the opposite of every other commodity. They've gone up in the last 48 hours. I think what happened is you've got a lot of thermal coal production in China in and around Wuhan that's been curtailed or it's offline now, or at least reduced. And so that supported the seaborne thermal market. And so that supported pricing. Sentiment's still bearish.
Sure.
And steel production in China has to go down, at least in the next couple of quarters. We all know that's going to happen. So that'll bring down metallurgical coal pricing. But for every commodity, none of this is related to fundamentals. And so when this does end, and it will end, pricing will come back.
For sure. So I picked Morien as one of my top picks stocks this year, especially for those who are looking on the low risk end of the spectrum, because of this catalyst driven year where you go from, you're already paying a dividend, it's a modest dividend, even though the yield is very high because of the small market cap. And now you have all of these catalysts, this huge increase in production, the potential for all kinds of the likely potential for all kinds of re-rating there.
Yeah, the re-rating event is going to be pretty easy to forecast. Doing a valuation on Morien is really easy. Even if you use a 8% discount rate on donking, which is conservative by any standard for an operating North American mine, you still end up with $1.50 net asset value, depending on where you put coal pricing. If they put a long wall in and go to 5 million tons a year, the NAV increases to about $3 a share after tax.
Yeah.
And so that's, I think, one of the reasons why Morien is so attractive to shareholders is because we're relatively easy to understand, and we're not going to do anything overly creative with that cash flow. We'll give it all back to shareholders, the majority of it in the form of a dividend. And so at today's share price, the potential yield range is somewhere between 15% and 30%, depending on which mining scenario they end up going with.
And when you publish that somewhere, people are going to think there's a typo, that there's a decimal point missing there, because 1.5 would be a good yield.
Yeah, and we haven't really marketed this company outside of what we do at Metals Investors Forum, because we haven't financed the company in 6 years. And so we don't really have any need to market because we don't raise capital. And so I think once the dividend does increase, we'll get out there a little bit more and start marketing Morien a bit more. And so I think the story will catch up to it a little bit. And that yield can't stay up forever.
No, it can't.
Yeah.
Well, I certainly look forward to this year. It should be lots of news. We'll see when the news comes as it happens. But I mean, all reason to be excited about Morien, coronavirus chaos notwithstanding.
Thank you, Gwen. We appreciate your support.